Welcome to the LA Real Estate Podcast on buying and selling real estate in Los Angeles. Today, we'll be talking with our friend Natalie Salins from Movement Mortgage all about the lending process. We'll be discussing my big move to eXp Realty, and we're going to go through 5 things to consider when choosing a budget for buying a house. Hi, everybody. We're back. And joining me in the studio today, well, as always, he's always with me in the studio, Christian Pedersen, also known as CP.
What's up, everybody?
Hey, we're back.
It's been a little while.
Yeah, we've been on a big break. Life, man.
There's been a lot of stuff going on, really.
It's been so busy. Work has been crazy. The kids were off school, the holidays. Everything just kind of came together, and trying to sneak away for hours to record a podcast has been really tricky. So I'm sorry for everybody that is a very consistent listener. We appreciate you. We love you. We have been thinking of you, but we've been so busy.
Yeah. And we're, just to go a little bit behind the scenes, this is a new venture for us. This is the first podcast that any of us have done. And so... Right. We're trying to figure out the best format, the best, how do we make this the best podcast and the most helpful podcast that it can be?
Right. And actually, if you have any suggestions, our contact info is on the podcast notes. So please reach out to us if there's certain things you love and certain things you like. Don't tell me anything you don't like. No, I'm just kidding. I have a thick skin.
Only positive feedback. Our egos are very fragile on the LA Real Estate Podcast.
They are. If you say anything negative, I will go home and cry.
Yeah.
Actually, that's not true.
Me too.
Yeah. I was raised by a very tough Polish mother, so I do have a very thick skin. So I can take a little critique. That's not gonna hurt me. So yeah, we'd absolutely love your suggestions. But we're back, and we are super excited to be back.
So, Sara, a lot of stuff has been happening. I know you've been super busy, and one of the things that's kind of gone on is you've changed brokerages, right?
I have. I'm super excited to announce I am now with eXp Realty, and I was with Keller Williams for over 5 years, and I had a great time with Keller Williams, wonderful people. And it was fun. But what I started to realize is the busier I got, the less I was going to the office, and really almost never going into the office except to basically pick up checks. And so, eXp Realty is groundbreaking. It's a newer realty company and a new brokerage. They are expanding across the country. They've gone into Canada. And really what attracted me to eXp Realty is just how everything is online, the communication. Obviously, I'm incredibly busy. So for me to have to go into the office, to drive in the office to take a class, whereas eXp, everything is cloud-based, which is really exciting. So I can actually go, you can create a little mini you, and online you can go to their class and you can sit in a virtual class. And I know it sounds crazy to some people, but when that saves you an hour a day from driving to and from an office, it just makes so much sense. And there's a lot of really great agents that I respect that are also with the eXp Realty. We're growing incredibly fast. So I'm excited to be in it. And also, I know we have a lot of realtors that listen to this podcast. So if you want more information on eXp, feel free to call me and we can chat about the pros and cons and why I chose to make the move. But I think it's going to help my business. I think it's going to, help me keep more money in my pocket at the end of the day.
That's
so
never
excited.
A bad thing.
Yeah. So let me tell you, kids are expensive, CP.
Yeah, that's why I don't have them. I can't afford them yet.
Kids are so expensive. And the thing with real estate is my job is really unpredictable. I mean, you could sell 5 houses one month and then nothing for a couple months. You never know how much you're going to make the following year. My accountant always says, how much do you think you'll make next year? And I laugh because I have absolutely no idea. So it's important for me to set up my, financials for the future and to plan. And what I'm excited about EXP, there's some things that are different, unique about it. So you can actually get stock for EXP. So that's interesting to me.
Oh, that's good.
Apparently, they're also going to be starting, or they offer health insurance, which I'm really interested to look into.
That's pretty rare, right? Amongst real estate, like you're on your own for that.
Very
usually.
rare. Yeah, because we're considered independent contractors. We're considered business owners under our brokerage. Our brokerage is basically like our oversight. They make sure that we're doing things properly. So no matter what brokerage you work with, they are in charge of overseeing to make sure the paperwork is uploaded correctly. So, for example, either with Keller Williams or EXP, when I'm in a transaction, I have to upload all of the paperwork from the entire transaction, and someone oversees the paperwork. If there's anything missing, I don't get paid until all that paperwork is confirmed. So it's actually a really good thing for consumers, for buyers, for sellers. You want to make sure that nothing basically fallen in the dark hole of paperwork, that the one form or whatever has been filled out. So all of the paperwork in the transaction is to protect the parties involved. So it's important that it's done correctly.
Yeah. That's the role of the transaction coordinator? Is that the name of the role?
Well, so I have a transaction coordinator as well. Most busy agents do. The transaction coordinator, that's part of their job. But the biggest part of their job is to chase signatures. Because for every document, so let's say there's one document, and let's say it's a final walkthrough. Basically, that's where we go walk through the property right before close. We make sure everything that's been agreed has been done. So right before the final walkthrough, you get the document. And now as the buyer's agent, I would probably write this document up. And then I would send it, I would have my client sign it, and then I would send that one signed version to the listing agent, and the listing agent would get her client to sign it, and then it gets sent back to me. So that's 4 different signatures.
And this happens with like pretty much every
document. So when you think on your computer interface, you've got probably 4 versions of the same document. One has one signature, one has 2 signatures, one is just the blank one that you created. So the TC is just somebody, transaction coordinator, is someone very organized that makes sure that all of the documents are the final version, that nobody's missed a date or an initial or a signature. And as you can imagine, as realtors, we're always rushing around. So if I know something needs to be done very quickly, I'll often text my transaction coordinator and I'll say, and her name is Brandy, she's wonderful. And I'll say, Brandy, can you please do me a favor and send this out? Because I'm not going to be back at my computer for another hour or 2 because I'm stuck in traffic or whatever. So it gets done very timely. And in my opinion, the paperwork is incredibly, incredibly, incredibly important. And I love having Brandy because it's one more set of eyes. So I see the paperwork. The listing agent sees the paperwork. Well, depending if I'm repping the buyer or the seller, the other agent sees the paperwork. Both of our brokerages see the paperwork. And then my transaction coordinator sees the paperwork. Also on the other side, there's probably a transaction coordinator too. So there's a lot of people looking at every single document just to make sure everything is done properly. And, you know, a lot of these things are done really quickly in a rush. And people do sometimes make mistakes. You know, someone will put the wrong date. An easy mistake, for example, would be to put 2019 on a document instead of 2020, just because your mind is still in 2019.
Right.
So anyways, that's the transaction coordinator. But I'm really excited about EXP. I'm excited to start this new journey. And also what's very exciting is under the EXP umbrella, I have my own brand. I have my own group. And I have created a team with 2 amazing, incredible, awesome rock and roll realtor ladies who you
might have heard of them.
Super excited. Yeah, I'm really excited. So we have Avery Carl in Nashville, and she's been in a ton of bands. She's an incredibly talented guitar player. And I'm also partnering up with Sharon Ross from a band that you might have heard of.
You might have seen them on Headbangers Ball back in 1990, 1991.
So she's from Vixen. I loved Vixen. There's a song, Edge of a Broken Heart. I've been living on the edge of a broken heart. Oh, my God. That hook is so ridiculously good.
everyone who's like in the range of about like late 30s to early 40s who's listening right now.
Yeah. And
knows
if you
exactly
haven't,
what we're talking about.
by the way, if you are not familiar with Vixen, go right now on Apple Music, download their music, because incredible. I mean, really incredible musicians, great vocals. Not only is Sharon just an awesome bass player, I mean, she's incredible, but she is one of the most hardworking women I have ever come across. I mean, a lot of the success of Vixen has come just from her sheer tenacity and hard work. She's incredible. So I'm really excited. She's in Florida. And we're going to be trying to get together every once in a while, maybe write some music. But we have a great team. So if you do know of a friend or a family member in another state that is looking to buy or sell, feel free to contact me and I can hook you up with someone from our team. We're going really across the country. So I'm really excited about that. We're going to continue to grow. And we really have a great market, Nashville, Florida, obviously Los Angeles, which is me. But yeah, reach out to me because I'd love to put you in touch with a great vetted realtor. And I'm super excited to be working with these awesome rocker ladies. And Sharon's actually going to be on the podcast. I can't wait to talk to her about some awesome rock stories. Yeah. And we'll have her come in the studio too at some point. Obviously, because she's out of town. And actually, Vixen still tours a lot.
They're on the Monsters of Rock cruise right now.
Yeah. Amazing. How fun is that? A rock and roll cruise. Yeah. And they play a lot. I mean, they still tour a lot. I'm really good friends with Lorraine, who is the singer. She's awesome. Lorraine and I used to play music together. We've all played together, actually.
A couple times, actually.
Yeah. We've all rocked out together. She's incredible. And she's also an incredibly amazing, hardworking rocker. I love Lorraine. Shout out to Lorraine if you're listening. I adore you.
Yeah. Lorraine is like one of the most fun people to hang out with.
She's so
Isn't
fun
she?
and so talented. Her voice is incredible. That's the one thing I'm a drummer, obviously. I can do a bit of backup vocals. I'm not a great singer. I am so in awe of anyone who has those pipes. She is an incredible singer. I adore her. Here's a buyer's tip. Choose all the little fixtures and order them before you start any remodeling project or work in your house. So if you're remodeling a bathroom, make sure you order the sink, the tub, the vanity, all the tile, and have it in your house before you start the work. Because any delay in any of those things will delay your project. So you might as well wait until everything is in place and go for it all together. Joining me on the show again is one of my favorite mortgage brokers, Natalie Salins from Movement Mortgage. Welcome back, Natalie.
Nice to be back.
Thank you.
Hello.
We had so much fun last year. We did a bunch of deals together.
Yes, we did.
And
it's awesome.
I think all of them closed early, which never happens. So it's pretty exciling.
That could be. Yes.
Everybody wanted to get into their
work swiftly.
Yeah, everyone wanted to get in their homes before the holidays, so it's really exciting. Well, thank you for joining me. So I thought it might be a good time to talk about people's credit because tax season is coming along. I get asked a lot about people's credit. So when someone comes to you and says, "Look, I want to buy a house. I'm not really sure. How does credit factor into how much people can borrow?"
So there's a lot of programs nowadays that you don't actually need a very high credit score or even a high credit score. You know, FHA will allow for a 580 FICO.
Oh, wow. That's crazy. That's pretty low.
It's low. Yeah. Yeah. They have certain guidelines on the lower credit score files, but 620 and above you can just go standard conventional.
What are you finding is one of the biggest reasons for people having low credit? Is there like some really common things that people do that really drop their credit scores?
There are actually. So most of the time, it's not even about super high balances. A lot of people come to me and they're like, "We paid off all of our debt. We're good. Our credit should be perfect." And I always feel like a little like, "Oh, I wish you would have come to me just before this because now you don't really have a large enough down payment." and it's good to have debt. Credit is based on how well you pay debt. So if you have 0, it's wonderful if you have 0, but it also doesn't quite show if you've had 0 for a long time, if you don't have a lot of credit cards.
So in some cases, it's better to have a balance on your credit card and have more cash in the bank than paying off your credit card before buying.
Correct.
Oh,
Absolutely.
That's interesting.
And I'll tell people, let me look at your credit first before you start paying stuff down, because we can strategically tell you which cards to pay down, by how much, how it will affect the score, like per point, like pay $78 down on that card and it'll bump your score up by 4 points.
How quickly can you kind of fix people's credit as far as something like that?
Like 5 to 7 days.
Oh, that's fast.
We do. That's not bad. Yeah, we call it a rapid rescore. As long as you get me the letters that show me the new balance on the account, then I can submit that back to the bureaus and have them update their, findings.
What are some
and then we repull.
That's great. What are some of the so let's say if someone has a 580, that's obviously a lower score. The difference of like say a 600 to a 650 to the top of the top, which would be what, 720, 740? What would be the difference of rates with those three?
That's a great question. So if we're going just standard conventional and we're at 620, the rate's going to be hit pretty intensely. We're probably going to be somewhere in the, mid 4s, maybe mid to low 4s on a property like that.
By the way, I think that's hilarious that that's considered high right now.
High. Isn't it crazy? Yeah. Well, because for great credit, like 740 and above, we're at 3.5. Like at par, or even I can give you a lender credit at 3.5.
3.5?
3.5. We hit lowest rates in 3 years yesterday.
Wow. I've been a little out of the loop because I've been in a fog with a sick kid, and that's insanely low. I didn't realize they dropped so much.
Yeah, a couple weeks ago or 3 weeks ago or so, they dropped quite a bit. Of course, because of the coronavirus,
right.
It kind of like shook up consumer confidence a little bit.
Right.
And now it's shaking things up in the market because they're thinking that production is going to be low this coming year and that it's affecting Apple and affecting, toys and, it's just changing consumer confidence a little.
Right.
And so so now rates have kind of shifted down. And the Fed says that they're probably not going to do anything with rates this year, that they'll keep everything pretty flat.
Wow. And we keep saying, we don't know how long these low rates are going to continue. But, wow, the last few years, it really is a gift to buyers or even people that have been in their house a long time for refinancing.
Oh, gosh. I'm getting people incredible deals on refinances. I have a file right now that I am lowering his rate, paying off $80,000 in debt to him. And he's saving in total, because we're paying off $80,000 in debt, all of his student loans, everything, and lowering the rate. So his loan is getting bigger, obviously, by like $85,000. But because we're lowering the rate, he is still saving $1,300 a month. $1,300.
Is he buying you flowers or anything? Taking you out for dinner? That's amazing.
Right.
That's incredible.
Isn't that amazing, though?
Yeah.
That's why you buy houses, because you have the availability to do that.
Well, it's funny because
and still save so much money.
Yeah, people focus so much on the price of the house. And that's why I always say, when you think about buying, your monthly payment is the most important thing. What are you paying every month? Because it doesn't matter if it's a $650,000 house or an $800,000 if the monthly payments are the same. So when I bought my house, our rate was 6.75%. And people were telling me, wow, that's a pretty good rate. And we refinanced years later, and now we're at a 3.75. It saved me, I can't even remember now, but like maybe $1,500 a month on my payment or something crazy. It was a huge amount of money that it saved. And I was able to pay my loan off way faster as well, because I put some of the extra money just on making extra payments to my loan.
I know. You have a great situation.
Yeah. Yeah, I know. We're looking for an investment property, but I keep giving all the best deals to my clients. One of these days, I got to keep one for myself, you know?
No kidding.
Well, that's really good to know. So interest rates really low. Credit, what are some of the things that people can do on their own before they talk to you to really kind of gauge their credit and maybe improve their credit?
It's always best to have at least 3 trade lines.
So that could be credit cards or
car loans, student loans, credit cards. Those are all that shows up on credit. That's it. Those are the 3 things, and mortgages, of course.
Right.
Credit only represents your debt. So it's a loan that you take out from somebody else. That's all that shows up on credit. That's why you won't find cell phone bills or electric or water or, your Wi-Fi bill. All of that gets paid in full every month. You don't actually get a loan for those things.
Right.
So regardless of paying those on time for 12 months, it doesn't matter because you're not actually borrowing any money from these companies. The only thing that shows up on debt is the money you actually are borrowing from companies.
So 3 credit lines, and then what else? What else can people do, let's say, the 6 months before they're about to buy a house?
I'd say try to get all your balances below the 30% or 70% mark. So if you have a balance of a credit line of $10,000, make sure it's below 7 or even 6.
Interesting. Okay. And then obviously talk to a mortgage broker, talk to Natalie, but months before you're about to look so that you can run all the scenarios and tell people, because I know that you've helped some people that I know figure things out before they were about to buy to put them in a better financial situation and get them the best rate.
Right. Exactly. And it's important too. Like I have a client who should have 800 credit. And we're getting started. She wants to buy in the next 3-4 months or so. And I pulled the credit, and there's a collection on there.
Oh.
And it lowered the score like 60 points. And she was like, what? And
wow.
Just had no idea. Like an $86 medical collection that she didn't have any idea about.
Wow.
But we're fixing it and getting it removed.
Well, that's something really important to know, too. There's random things that can show up that, like a collection. There was a medical copay I think I had for $40, and I had switched my insurance. I can't remember what happened, but I wasn't even getting the statements, and it showed up on a collections, like, we're sent you to collections. So I had to sort it out, but it was just a, missed piece of mail. So it can happen. So it's important for a lender to, look into these things before you're about to buy so that you don't have to deal with it in escrow.
Absolutely.
Which is why
then it can become crazy.
Right. And which is why as realtors, we always say, have your pre-approval before you start looking for a house. And a lot of people don't want to do that. They want to wait until the last minute. But another like 10 reasons why it's a good idea to get a pre-approval before you start looking. Natalie, thank you so much for joining me on the show. You're the best. And coming up, we'll have a buyer's tip. Here's a seller's and a buyer's tip. Clean your air filters. We live in Los Angeles. The air is filthy, horrible and filthy.
Dusty.
So it's dusty and smoggy. It's a bit of a downer. But actually, not even just for that. It's allergy season right now. I have seasonal allergies that only came along 3 years ago. Mm-hmm. I actually discovered I'm really horribly allergic to black walnut trees pollen. Yeah.
Thanks.
Isn't that weird? Which is a protected species in Mount Washington. And people always try and get me to sign the Save Walnut Canyon petition.
Not signing it.
And I am not signing it. Those walnut trees make me miserable for about 3 months out of the year.
Walnut trees.
I'm sorry to walnut tree lovers, but they make me miserable.
I am not sorry to anyone who who loves walnut trees. You know who you are.
Yeah, you're out there trying to get me to sign the petition. Anyways, changing the filters does help. So in your house, a lot of people don't know this and never change it. There's something called your HVAC, and there's a little drawer type thing. You open it, pull it out, change the air filter. They're a few dollars at Home Depot. They're usually $3 to $5. I change mine every single month and keep that air clean. All right. Okay. So 5 things on how to decide how much to spend on a house. I have lots of clients that come to me and they've talked with a mortgage broker. They know what their budget is as far as we can go up to this number. But how much do you really spend? How do you decide? If you're given a range from your mortgage broker, hey, you can go up to $1 million, how do you figure out, should I go to 8? Should I go to 850? Should I go to 9? And here are 5 things that I want you to think about before you decide on your budget. Number 1, the worst case scenario, can you still afford the payment? So we talk a lot about the price of a house, but really the most important thing is your monthly payment. So how much are you going to be paying every month for your property tax, your mortgage, and your utilities? How much is that number? Now, worst case scenario, let's say you have been laid off from work or you're sick, as far as like a bad illness that you're going to be off for weeks or months. Will you still be able to afford that payment? Do you have enough savings? Do you have a reserve? Let's say a 6 months reserve, I think, is a good amount at least. Or even, do you have family members that you don't necessarily want to, but if worst comes to worst and something really horrible happened to your work, your family, that you could call them and say, look, this is a really unusual situation. Do you think you can help me with a mortgage payment? As long as a worst case scenario, you can still afford your mortgage, that is a good payment for you. If you're thinking, every month, I'm only going to have a tiny bit of a reserve, this is this is going to be tough, that's too high. That's too high in my opinion. We don't know what's going to happen with the economy. We don't know how much the election is going to shake things up. With everything happening in China right now, with the Wuhan virus, we don't know how that's going to affect their economy and our economy. It is really important that you don't overspend on your mortgage payment. So worst case scenario, number 1. Number 2, do you have friends or family that could help in a really bad situation? I know we talked about that a little in number 1, but do you have a support system?
Right.
If you don't have anyone that can help, you're a single mom, you don't have family, then, you want to stay in a lower price point. Number 3, big one, do you have children?
Oh, God, yes.
If you have children, you might as well just take all the money out that you own and burn it. Well, don't do that.
Don't do that. You need it for the kids.
Kids are so expensive. Oh, my gosh. So before I had kids, I thought about a lot of things about as far as, I'm going to have to feed them. I'm going to have to, buy clothes for them. The things that I didn't consider, and I don't know why, was childcare, was things like after school care, babysitters, summer camps. Every summer, thousands of dollars to put my kids in a decent camp, and not even like crazy high-end amazing camp where they go horseback riding. And I'm talking about a good quality, vetted, insured, registered camp, thousands of dollars, at least $2,000 a month for the 2 kids to be in, and really more. And that's just part-time. That's about from 8 to 3 or something like that. So look, kids are so expensive. So if you're pregnant, if you're thinking of having kids in another couple of years, make sure that you have a reserve for that. So you might want to stay in a payment that's a tiny bit lower. Having said that, you also want to keep in mind, if you're having kids, you want to be able to grow into your house. You don't want to grow out of your house.
Right.
So if you're planning on having kids, it's probably better to buy a bigger house that maybe needs a little bit of work instead of a super beautiful, high-end turnkey 2-bedroom house in a great hot location where you can walk to the restaurants. That is not going to matter as much to you when you have a child. What's going to matter is that, your baby has their own room when they turn into a toddler and they stop waking you up in the middle of the night, which is a wonderful, wonderful thing. So something really important to keep in mind, if you're going to have kids, stay in a better price point and get more square footage. Better to buy a house that needs a little bit of work.
We got, I think, 3 more to do, so I'm going to let you finish. But when you're done, I actually have a question for you.
Ooh.
And I'm going to put you on the spot a little bit, okay?
Okay, I'm excited. I hope it's about children. Okay, number 4, are you planning any large career moves? This is also a topic that you really want to consider because... So let's say that you're in a career that's super, super safe. You have a job, you have a pension, it's a well-established company, there's pay increases at a certain point, you're W-2'd, it's a very consistent job. You expect in 5 years you're going to be making more, you're going to be even more financially stable. you want to consider that. So great, you maybe would go up higher in your price point if you know in a couple of years you're probably going to be making more money. You're going to have even more in savings. You're going to have retirement. However, if you have a career that is really unpredictable, if you're an actor and right now you're making a ton of money, but you're on a brand new show, what could happen in 2 years if that show isn't around anymore? So again, that comes back to best case, worst case scenario. But think about your career. Where do you think you'll be in 5 years from now? Where do you think you'll be in 10 years from now? Most people stay in their house in LA for 7 to 8 years. So you want to make sure that in 6 years, if your career is completely changing, that you're in the right property for that. And then also that goes along with how secure your industry and work is. And then the very last one is, are you planning to stay around for 7 years? Do you think there's a chance you might be moving? So if you know you're not going to be in the house for longer than 5 years, it might make sense to go in a little bit of a higher price point and get something that doesn't need a ton of work because you know you're not going to be there for that long. You don't want to shell a whole bunch of money in and then have to sell. So those are the tips right now. So really, you don't want to overextend yourself. If it's the difference between 600 and 650, and 650 can get you in a much better neighborhood, and the difference of payment is only $30 to $50 a month, then it probably makes a lot more sense to bump up. All things that you want to think about and all things that you want to discuss with your lender, but make sure that you're not putting yourself in a house that will put you in financial ruin if anything unpredictable happens in your life or in your career.
Okay, so this is not the question, but we've heard when we're like looking to rent an apartment or something, don't do more than like 25% of your monthly income, or sometimes you'll hear as far as like 30, a third of your income. Do you ever use that same kind of model when deciding a payment? Not
really. So the way that it gets a little more complicated too when there's two incomes coming in. So what I find in LA is that people make a lot of money, but they also spend a lot of money. People eat out a lot here. People travel a lot. Entertainment's really expensive here. So I think it is important. I would say that you want to make sure that once all of your bills and all of your expenses are paid, that you still have plenty of reserves for the fun stuff. And the good thing about that is if you do get in a financial situation where you're a little sticky, you can choose not to eat out at all that month. You can choose not to go to concerts and events that month and save and stay at home. And really, I find that more people do choose to stay at home and spend less on those types of things after they own a house because they start seeing value of where their money is going to go. So, for example, instead of eating out twice a week every month, I would rather save that money and do something with the house. Like we're actually about to renovate a bathroom pretty soon. So I would rather scrimp a little on all the fun stuff and put that into my house. So I'm seeing that a lot more. Hopefully that answers your question.
Okay. All right. So here's the one where I'm going to try and put you on the spot.
Whoa.
Okay. So
Hold on. I'm not ready.
Okay. Ready now?
No.
How about now?
Okay. I'm ready.
Okay. So let's say I'm a first-time home buyer. Maybe I have a young family. And so we're looking at the payment, and there just isn't the right option. Anything I can afford is either something I know I'm going to grow out of really fast, or it's too far from where I work, or it's just, it's not quite in the best neighborhood. So if I'm going to buy now, I'm going to have to compromise something. Like, what would be your advice to someone like that?
So absolutely. So if it's between renting and buying, buying all day long, because when you rent, you are throwing that money away. It's going in the garbage, and you're paying a mortgage. It's just not your own mortgage. It's somebody else's. So buy. Now, if you have to give something up, I would say one of the things that I notice with my clients makes the most sense to give up is generally location. So, for example, someone really wants to be in Silver Lake, but they end up moving Highland Park, Eagle Rock. That's a little bit more upcoming, but not as expensive. So I think neighborhood, and obviously we talk a lot about neighborhood in this podcast. You want to move somewhere where you see that values are starting to go up. You see that the neighborhood is not full of crime. Safety as a single female, obviously, is really important. I have a lot of clients that are buying on their own and they're single and they want to live in an area that's safe. So the things that I would give up, things like having things very turnkey. I mean, the best buys tend to be cosmetic fixers where, the kitchen and bathrooms are ugly and dated and maybe there's carpet in some of the bedrooms or something and the walls have old wallpaper. Those are the best buys. The worst buys are bright white staged turnkey houses because people pay a premium for that. I just wrote an offer in Altadena for a lovely, lovely couple. I love my clients. Can I just say that? I have some amazing, amazing clients and wonderful clients. But this house was beautiful and the staging was incredible and the photography was beautiful. And you go to the open houses and they were just absolutely packed. They got 19 offers. The house ended up selling. At a certain point, I told my clients any more than this, and they were high in their budget. I said, any more than this, I think you actually would be overpaying for the house and risk that if anything shifts with our economy, you might be underwater in a couple of years. I don't recommend you go higher than this. And obviously you do what you want. At the end of the day, it's still your money. So they chose not to go higher. But in my opinion, someone overpaid for that house by a lot. Once the staging, beautiful staging is removed and the pretty pictures and all the bells and whistles are gone, it's still just a house. It's a pretty house, but it's still just a house in an area that's still upcoming. So those are the things you want to consider. Most first-time home buyers are dazzled by the staging and the pretty white walls and the bright photography. But I like to show houses that have the ugliest pictures because those are the best buys. So when you're looking on your phone, and you'll see it's the good agents do this. I do this as well when I sell a house. When I'm the listing agent, when I sell a house, I want to make the house look as beautiful as possible. So I have an incredible stager. He is so talented. His name's Travis, and I adore him. He's also a really sweet guy. He's actually staging a house for me as we speak in Mount Washington. So by the way, if you're listening to this, give me a call. I'll tell you all about my amazing Mount Washington listing coming up. But, it gets more money for the house because you're making it look super, super, super beautiful. You're putting it in the best light.
I think we did a couple buyers tips on this.
Yeah,
on
we
previous
really
episodes.
did. I remember especially go look at the houses with the ugliest pictures. And that's a buyer's tip that repeat, especially if it's a house with one photo. Because 90 out of 100 people, maybe 85 will swipe right past that, not even look. Maybe 1 or 2 will actually go see it in person.
I'm going to give my own little buyer's tip here.
Ooh, CP buyer tip.
So, yeah, you might look at a house and might only have one photo, and it may not be that impressive. So, obviously, you might be inclined not to look at it at all. But take the address and look it up on Google Maps, and you can see the neighborhood and find out a lot about the house. So, you can maybe see, well, maybe the photo doesn't look that good, but it's in a good neighborhood.
Yes.
I like the location. And so then you might have just stumbled across a great fixer-upper that you'll get for a really good deal.
Absolutely. That's a great tip because it's a great way to see, especially in LA, we have a lot of freeways that kind of crisscross. So when you're looking at Google Maps and you spin it around and do the 360 and you see it is on the freeway, you don't even have to waste your time to go see it. You're not going to buy a house that's on a freeway.
Right.
So good tips, CP.
High five.
You might be in charge of the buyer's tips from now on.
Oh,
Now until eternity.
I don't know. Well, actually, we're doing this under your license.
Oh, yeah.
So if any of my tips go wrong, it's
all on me.
It's on you.
Okay, deal. Thank you guys for listening to the LA Real Estate Podcast. I want to thank my guests, Natalie Salins, Christian Pedersen. Actually, another tip is if you need any web design stuff done, CP is your man.
I'm very selective.
Very selective.
Very expensive.
He's very expensive. You can tell by his clothes. He's got real fancy shoes on right now. Fancy pants. fancy pants, CP.
Yep, I wore my Calvin Klein suit today. The Armani ones at the cleaners.
Well, thank you everyone for listening. We'll have more episodes coming up. I'm going to try and get back here a little more often because I miss it. I love hanging out with you guys. It's amazing. So have a great day, and thanks again for listening.